I know what I'm about to say is probably going to make you feel as though I'm an idiot and that I'm wrong, but I want to say it out loud. Your Forex trading strategy is stupid. And in fact, your trading strategy in general, if you're trading any market, whether it's Forex or crypto and stocks, is stupid unless it has these things in common that I'm going to show you here in this video. And before you dare to insult me or tell me that I'm wrong, I want you to consider whether or not you yourself are profitable. Trading is very risky and most people lose money. And as a matter of fact, 90 to 95% of people do not make any significant amounts of money trading Forex or crypto or stocks or anything else. I myself have been trading for over a decade and I have made millions of dollars in Forex and crypto and stocks combined. And what's more is I've actually shared all my trades and analysis and insights and outlooks and everything for the past 8 years. Yes, 8 years since the summer of 2018. Here in my free Telegram channel. I'll put a link in the description and the pinned comment if you want to check it out and follow my trades and analysis. But I post it all in here for the world to see, and it's all free. It's probably more than your guru is actually doing for you to be able to actually teach you how to trade. And I prove time and time again that as long as you do these couple simple things, which I'm going to break down here in this video, in trading, that trading does not have to be complicated. It does not have to be insane. It doesn't have to be this stressful thing that is stupid, doing all these things that don't matter in the cost of things that really do matter. So I want to show you the things that really do matter here in this video. And we're going to start by just going to a chart. Here's what I want you to do whenever you open up your charts next time on TradingView. What I want you to do is I want you to go to the charts and I want you to make things really, really simple. I want you to take off all the indicators on your chart. I want you to take off all the little chart patterns and chart tools that you use and use nothing except support and resistance. Okay, now bear with me here, but keep in mind, support and resistance is all you need. Why? Because basically every single trading strategy that you could come up with relies around the idea that price is either going to bounce somewhere or continue somewhere. Even if you're using trend lines, you're still thinking that price might bounce at a trend line or break a trend line, right? So it's support resistance just diagonally. If you're using Fibonacci, you're using that as support resistance. You think it's going to pull back to your little golden zone, the 618 Fibonacci, you think that's going to save you? You're going to enter there, put a stop below, target above. You're still trading off the idea of support resistance. Oh, you trade moving averages. That's great. How beautiful. Price comes to a moving average and you think it might bounce or break the moving average. It's all dynamic support resistance or static support resistance. That is why I keep things ultra ridiculously simple by just using higher time frame support resistance zones and using those as a way to be able to go and control risk, to get into trades and make a little bit more when I'm right versus what I lose when I'm wrong. Now I'm going to show you the entire process here in this video, but basically put, here are the two things that you need to do if you don't want your trading strategy to be stupid. And again, this is built on the back of 10 years of trading and 8 of those years trading profitably. And during those 8 profitable years of trading, sharing all my stats and P&L and trades and everything in my free Telegram channel. Okay, this is not just me talking out my ass here. I prove day in and day out, every single day, literally live, that what I'm doing works. And it's like a fraction of the stuff that I see most people doing, all the stupid things I see people doing. It's really, really just so stupid. So let's get into it. I'm going to clear all the drawings here off my chart. And then what I'm going to do is I'm gonna actually go to a random pair. Let's go to this beautiful thing right here that I call the random number generator. We're gonna be trading randomly right here. I'm gonna pick a number between 1 and 10, and this number happens to be 4. Okay, so we've got number 4. Let's go to the chart. Let's pick the 4th currency pair we have here. So 1, 2, 3, 4. So we get on Euro GBP. Now I'm gonna remove all the chart drawings here from Euro GBP. Then what I'm gonna do, I'm gonna go to the 1 hour, hit replay, start new, gonna go to a random bar. It's going to take us back somewhere random. Where does this happen to be? February of 2019. Great. Now I'm going to go back to the daily chart. Now watch what I'm going to do here. This is how simple trading can be. Okay. The two things that you need to focus on is number 1, you have to keep things simple. Easier said than done. I'm going to show you exactly how to do it here in this video. Number 2, you have to control risk. Meaning if you combine simplicity and risk management and you just do those two things meticulously, consistently, sustainably, and predictably day in and day out, those are the most people that I see get the best results in trading. You know what? And I'm uniquely qualified to say this. I've worked with over 4,600 clients over the course of the past 6-7 years, teaching them this exact same stuff. Nobody gets better results than if they just keep things simple and control risk. And if you don't believe me, go and look at people who are actually profitable, successful traders. They don't use a million different chart drawings. They don't look at a million different pieces of fundamental and economic news. They look at the charts, they know exactly what they're looking for, and it is very, very simplified, and it's very, very distilled into just what matters and leaving out everything that doesn't matter. So we're here on the daily chart. Here's all we're going to do. We're going to look at current market price. We're going to look at an area below price where we think price is bounced. We're going to call that a support zone. Then we're going to look at an area above price where price is bounced. We're going to call that a resistance zone. Then guess what? What are we going to do? We're going to enter a trade right now. No, I'm just playing. We're going to wait for price to get to one of those support or resistance zones. Look how simple this is. A black background with just white candles, right? We don't even need different bull and bear candles. That's stupid. It's a waste of time. It's pointless. It doesn't matter. You can tell if a candle is bouncing at a damn zone or anywhere else on the chart by just looking at whether or not there's a wick there or there's a candle going away from it. You don't need to have pink and purple candles or red and green candles or blue and green. You don't have to do anything like that, right? I use all white candles and black backgrounds on the charts. Just black and white color scheme. It is simple. It is basic. It is straight to the point. It prevents your emotions from getting involved, seeing big red candles that scare the hell out of you. It's so simple to do it this way. Now we're going to wait for price to get to one of these zones. And when price gets to one of these zones, we're either going to buy or sell. Now, what I do is when price gets to one of these zones, what I do is I use the 1 hour, just like I showed you in the beginning here, or go to the 1 hour, and then I see if price begins to bounce on the 1 hour to be able to get into the trade. One thing I want to point out here, you have to use a little bit of nuance, a little bit of discretion. You have to examine the context. You have to use a little bit of price action discernment, right? All these things come from experience, and you only get that experience with chart time, which is why I literally just share all my trades and analysis for free in Telegram to help you get that experience in chart time. So what I do is I go to the 1 hour and I see if price starts to bounce at the zone. And if price does in fact start to bounce at the zone, I enter a trade. Let's go to the 1 hour and see what price did whenever it got here to the zone. So I wait for price to get here into the zone. We have a little bit of a little bullish wick right there, but not enough to show us price is turning around. Price gets deeper and deeper and deeper into the zone, breaks below the zone, pops up and retests, and then it falls away. There's nothing in here that shows that price stopped long enough and started to look like it was going to reverse until the point where we could have entered a buy position. So in this case, there's no trade unless price pops back above the zone, then comes back in to retest it. Let's see what would have happened. Would it have gone down or would it have gone up? It looks like in this case, it would have gone down. So what we'll do is we'll go back to the daily. And now what we can do is we can trade this, a break and a retest of the zone. Okay, so then we'll take a retest of the zone. We'll sell right there. But we need to make sure that when price gets into that zone, we go to the 1 hour first and we look and see what the price action is doing. Then we make a contextually appropriate decision as to whether or not to buy or sell. So let's first let price get into the zone. It needs to come deep into the zone. We can't have these little tiny touches that are just outside. There we go. So price gets deep into the zone, meaning just at least halfway or more. It's usually better if it can get a little bit more, but we need to at least go halfway. So we get into the zone. Price touches the zone right there. And then as soon as it gets into the zone far enough, which is again just halfway in the zone, we start pulling away with a little bear candle. What the hell are we doing? We are just waiting for price to get into a clear support resistance zone. If it is at a support zone and price starts bouncing, then we buy. If it's at a resistance zone and price starts bouncing, then we sell. That is all we have just done here. And we only needed 2 time frames, literally the daily chart to just draw 2 zones. One above price and one below price, and the 1 hour chart just to see if price is bouncing at the damn zone before we enter. Okay, after price starts bouncing, what do we do? This is exactly how you set it up. You're going to enter a short position. You're going to take the stop loss right after you have your entry. You're going to drag it just above the zone. Where above the zone? Check it out. It doesn't have to be complicated. You don't need to put it just above the zone. Stupid. It'll take you out so many times and in reverse, and you'll just be frustrated. But you also don't want it to be too far above the zone, right? We don't have to have the stop loss like 400 pips above the zone in most cases, right? You just don't need to have it that far. Just look at where the actual zone is that you're trading off of and drag the stop loss just above the zone. Not too far, not too short. You want to make it just right. So something like this will be fine, maybe even a little bit closer. Then what we'll do is we'll set a 1-to-1 risk to reward ratio. Okay. Now we already know this is a daily zone. We already know there's a lot of price action here where price has bounced a couple times in the past. We already know this is a really, really clear area. The chart's not even rendering. It's not loading, but this is a really clear zone where price has bounced out on the daily multiple times. Now what we do is we get into a trade, and then here is the most important part, right? The risk structure. Put a stop loss above the zone, put a target below at 1-to-1 risk reward ratio. I don't want to hear it with you using 1-to-10 risk reward ratios. You try to go do that in practice, you're going to have loss. Then you get a win, but then it comes all the way back, hits your stop loss or gets out at break even. Loss. Then eventually you get a win. And you feel so proud of yourself. You got a 1-to-10 risk reward ratio, and then you give it all back on the next few trades, plus fees and commissions. Stupid way to trade. I don't even want to hear you trading 1-to-5 risk reward or 1-to-2 risk reward ratio. Because of the way that these trades are managed, you don't need to do that. You can keep it simple, just a 1-to-1 risk reward ratio. The stop loss is basically just like a worst case scenario emergency to just take you out of the trade. But realistically, you want to be exiting the trade if it starts to not work out a lot quicker, because you can keep your losses really, really small. Then whenever you start to win a trade, you just hold the winning trades. Quite simply put, Whenever you're keeping things simple, that helps you get into trades that are very basic. Support resistance bounces on the daily chart and then confirmed on the 1 hour, meaning it just gets into the zone, starts to bounce away in the 1 hour. No pyrotechnics, no mental gymnastics, no bullshit. You wait for it to get to those daily zones, and then on the 1 hour chart, you make sure it's starting to bounce away. That is a non-stupid way to trade, to be able to get the entries, and that's simplicity. This next component is risk management. You set up your trade with an entry at the zone. Price needs to be inside the zone at the moment you enter. If it pulls away too far and it's already outside of the zone by the time you start wanting to take the trade, just wait for it to pull back into the zone or don't take the trade. But as long as you're entering inside the zone, that's your entry. Stop loss above the zone if it's at resistance, below if it's at support, and then a 1-to-1 risk to reward ratio. Trust me, I've been doing this shit for so long. I've been trading this exact same approach with varying risk structures over the past few years since 2019. That's 7 years I've been doing this exact same shit, and it still works. And it works in all markets. It's worked in Forex. It's worked in crypto. It's worked in stocks and equities. It's worked in futures. It works in every single market environment I've ever experimented with. And I use this primarily in Forex trading. My stock portfolio, I just buy and hold the S&P 500 basically. And it works in crypto too, where I structure my entries based on the idea of support resistance. So this goes into profit. If it starts going into profit, we want to hold it. We don't want to close it early. We want to hold the trade if it goes into profit. And if it starts going into loss, we want to close it. So we're going to be clicking this forward here. I'm going to see what price does. Started to go into profit, then it came back. I'm going to be clicking just fast enough where this doesn't take too long, but slow enough where we can still keep an eye on what's happening. So it's going into profit. Oh, but what do? It's going into profit. Now it's going into loss. What do we do now? Well, it's still here at the resistance zone. So if it starts breaking up further, we're going to close this trade early. But if it starts going into profit here, then we'll just hold it. This is the make it or break it moment. So it starts to go a little bit higher. Looks like that was a gap for maybe the market close for the weekend. It goes back up a little higher, tests the zone, starts to pull back. And then, okay, so here, what do we have? We have a support zone. So price is not to our target, but it's here to support zone. It's bouncing. So we should close the trade early, right? Wrong. Stupid. You don't know what's going to happen. Support resistance gets broken all the time. You use it to structure your trade. If it's in profit, you hold the damn trade to your profit target under all circumstances, unless, this like 5% of the time when like price is like, let's say like it's a Friday, the market closes in 2 hours and price is 90% of the way to your profit target. Okay, well in that case, probably better to just close the profitable trade because it's basically at the profit target. And on top of that, you can avoid the swaps, you can avoid the spreads, you can avoid the gaps and all the other bullshit that happens over the weekend and having to sit in the trade over weekend and paying all the extra fees. Cool. If it's like 90% of the way to the profit target or even 80% of the way and the market's about to close, that's one of those few exclusions and exceptions to the rule where you could just close the trade early right there. But aside from that, and basically almost every single trade, you need to be holding it to the profit target regardless of what you think is going to happen. And check it out. In this case, it falls down to the profit target. So in this case, this trade won. All it did is it went and just retested a little bit deeper into the zone. It did not become invalidated because it was just testing the resistance zone. You see right here? Price just popped up into the zone, tested the resistance zone. If it would have started breaking above this zone and closing above and then going sideways in the 1 hour, we could have gotten out of that early. But in this case, it ends up bouncing. So we've taken that trade, and that was a cool trade. And now check it out. Price is back right after we had the profit target hit down there. That same candle comes all the way back. So you know what we're going to do? We're going to say YOLO, and we're going to enter a trade again. Just kidding. We're not going to say YOLO, but we're going to take another trade based on the continuity of the setup and the fact that price is, in fact, in the zone again. So price comes into the zone, and then it starts to reject right here. So we have a nice little rejection candle. We had a candle come deep into the zone. Then we had rejection. Okay, cool. We have those two things that are our simple trading setup, right? The super simple S-tier God level setup. Price comes into a daily resistance zone, and then it starts to reject. So what we do, we enter after that rejection, which would have been right there at that little candle closure on the 1 hour, right? Popped into the zone, started to reject. And then we're going to do the same thing with our stop loss. We're going to put our stop loss above this zone, and then we're going to put our target below at a 1-to-1 risk reward ratio. So it's basically the same exact trade, right? Same parameters, basically. Literally the exact same entry as before, too. It just so happens to be. So now if price starts to buck up above this zone and continue up and go sideways here at the resistance, we'll close it. And if it starts going into profit, we'll hold it. Let's click through very slowly so we can see what happens. Okay, going slow. Going sideways. What's she going to do? What's she going to do? Going sideways. She's going into profit. Oh, she's going to profit, but she might be pulling back. Oh, we got to pay attention. Now she goes lower. Okay. Oh, damn. It hit the profit target. Maybe we should have closed a little bit early right here because, it was going there. Then it started to go back up. No, You hold the trade if it's in profit all the way to the profit target. In this case, it is the profit target. So now we just have 2 wins right here on Euro GBP. Let's wait for one more trading setup to occur, and then we'll take to the next trading setup that occurs. Hopefully it's a loss, so I can show you guys how to get out of trades a little bit early if it starts moving against you. And if not, you can just join my free Telegram channel and watch it. All right, price comes up here into this zone again. Now we'll go to the 1 hour chart. Price gets up here into the resistance zone. This little first test didn't go at least halfway into the zone. We need to really wait for it to get a little bit further. So in this case, we go up further. Then we start to pull back here on the 1 hour with this little bear candle closing like that. Okay, now we're really deep into the zone. Now we're tugging back. I hope this trade loses so I can show you guys exactly how this works. So we're going to enter there at the zone. We're going to put our stop loss above the zone here. And then we're going to put our target at a 1-to-1 risk reward ratio. So the parameters are slightly different on this one than the previous two, but the criteria is still set up, right? The 2 things that make a trading strategy not stupid: keep things simple and control risk. We are keeping things simple. Price is at a resistance zone. And then on the 1 hour, it's at a daily resistance zone, meaning just a higher time frame resistance zone. And then on the 1 hour, it's starting to bounce. We look at the 1 hour. The candle gets into the zone and starts pulling away. Sweet, cool, perfectly fine. So in that case, it starts to bounce, so we enter a trade. If it starts going into profit, we hold. And if it starts going into loss and breaking above this zone, we're going to try to get out of this trade a little bit less of a loss. From time to time, you're going to have your stop loss hit. That's okay. That's what it's there for. It protects you from your worst case scenario. And you risk however much you're comfortable risking on this trade. Right now, I myself am risking $25,000 to $75,000 per trade with an average of about 50K risk per trade. If I only come out and top 2 units of profit in an entire month, that is $100,000 of profit. That's absolutely nuts and ridiculous. And I've made hundreds of thousands of dollars in profit over the course of the past 5 months on the new account that I started like 5 months ago. And I track all that stuff here in Telegram. I literally post all my P&L. I post everything, all the wins, all the losses, all the P&L, every single time something's good or bad. It doesn't matter what it is. I post all of the analysis. I post all the P&L. Here's the past at this point where I was at last week. $350,000 deposit, 4.5. It's basically almost been 5 months ago. $300,000 profit before swaps and commissions. Basically almost double this account before swaps and commissions, which is absolutely phenomenal. So now we're going to see this play out. We're going to see what happens. Hopefully it breaks above so I can show you how to get out of this trade. Okay, let's hope it. There we go. So it breaks above. So what we're going to do is we're going to close the trade early right here as it starts breaking this resistance zone. Now, if we look and see how far away that is, right, from the actual stop loss, that's the entry right there. That's the stop loss up here. And then what we have is we have the closure, which would have been right here. Now, how far away is the closure from the actual stop loss? You might say about 1/3 of the way, right? It's certainly not halfway. This would have been about like halfway right there. So this might be around, 1/4 to 1/3. We'll round it up just to be more than fair. We'll say it's about 1/3 of the way to the stop loss. So we're going to close that there. When we go to the calculator, you can see that right here in the calculator, we have 1 unit of profit, right? Plus another unit of profit from the second trade we won, but then we minus 0.3 because we lost about 1/3 of that last trade. The total net P&L is 1.7 units of profit. Now to put this into perspective, this is only 3 trades, right? So it's not really big enough of a sample size, which is why I just call my trades for free in Telegram and just share my analysis there, so you just see all of it live in real time. Backtesting has its limitations. I'm just showing you on the backtesting just to show you the damn proof of concept so you can see how it works, so you can not make your trading strategy so stupid and you can actually optimize it and plug it in the right way where things are simple and it has a clear risk structure and you're managing the trades based on the context. Okay, so don't at me in the comments for saying, oh, you need to do it live, bro. I've been doing this shit live for 8 years, improving time and time again, having made millions of dollars doing this and showing all the P&L and the results there in the Telegram channel. So with this right here, if we won these first 2 trades, but then we lose the second one, we're in 1.7 units of profit. That's great. Nice, healthy little profit here. Even after every 10 trades, on average, I come out only 1 to 2 units of profit after every 10 trades. Truth be told, that's just what my stats are, right? I suck at trading. But after every 10 trades, if I'm coming out even 1 unit of profit, that's $50,000. And I can take 10 trades, usually an average of like 2 to 3 weeks. The worst case scenario, it's like a month, right? That's like 2.5 to 3 trades a week. I get more than that. So it's about maybe 2 or 3 weeks. I can come out at 1 to 2 units of profit per month doing this. Sometimes more, sometimes less. I lose a couple months out of the year or I break even a couple months out of the year. The last 2 weeks, I've lost $150,000. My account was up to over 600,000. Now it sits at about 470,000. Okay, so it is what it is, right? I win some, I lose some, but I make more than I lose long term because of these stats and how they play out right here. if you had risk, just say, let's say $10,000 per trade right here. You know what? Let's just make it even more realistic. You're probably not risking 10K per trade. You know, truth be told, right? I'm not stigmatizing you. I'm not condescending. I'm not being an arrogant asshole, but I recognize most people are not trading with millions of dollars of capital when they're Forex trading. Cool. Fair enough. Let's say you're risking $100 per trade. You win 100 here and then 100 here. That's $200 profit. And then you lose $30 on this one, right? $100 risk. You lost a third of that. It's about $30, $33, $35, you know, whatever. So if let's just say $40 of loss, right? So if $200 minus $40 of loss, you still made $160 profit. That's great. Whenever you keep on dialing up the risk, like for example, you're risking $1,000 per trade, you would have made $1,600 of profit. 2K in profits on these winning trades, and then you lost $400 on this one. Cool. $1,600 profit. You risked $10,000 per trade, you would have made $16,000 for profit. If you're doing like me and you're risking $50,000 per trade, you make $100,000 right here on these trades, and then you lose, what would that be? Like 20 grand on this one. So you still would have come out on top, $80,000 profit. This is the simplified way to do it. And you just do this over and over and over again. I have plenty more YouTube videos here on my channel, me backtesting and showing all this stuff, but I wanted to get this video out to you today so that you could find this video and get it to show up in your recommended feed so you can have someone tell you, somebody who is qualified to tell you, someone who's uniquely qualified and who's tried all these little bullshit strategies that are super complicated, complex, walking on the tightrope of mental gymnastics, desperately trying to make it work. I've been there. I'm telling you, it doesn't work. Your stupid trading strategy doesn't work, and I don't want you to keep it being stupid. The reason I'm being so abrasive here in this video is because I want it to sink into you. The fact that you saw this video on YouTube and the fact that you have me yelling at you here in a YouTube video, trying to tell you and scream at you about how simple it is, and literally giving this all for free to you right here on my YouTube channel and then in my free Telegram channel, where you can literally go through the history of the last few months and see for yourself the account growth. You can see all the trades I've called, the simple analysis, how much I'm risking per trade. It's the same basic shit over and over and over again. My main thing that I want you to bring away from this video is to focus on not having a stupid strategy, but instead keeping things simple and controlling risk. Having a simple strategy that's easy to duplicate over and over, and then having a clear risk structure that allows you to make more when you're right versus what you lose when you're wrong. I want you to go and do this. I want you to backtest this, and I want you to follow my trades on my free Telegram channel on a demo account for at least a couple months. That way you can learn all this stuff so that you can make more progress this year in your trading journey than you ever have before. I hope this video helps, and if you liked this video, I appreciate it. I'll see you in the next one. Cheers.